Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, February 29th, 2024. I am Frank Ochoa, aka PivotBoss. Happy Leap Day, everyone. Here's a look at the daily time frame of the ES. Right now, very clear compression this week. Very clear compression this week. The last trading day of the month. Checkmark trend months to the upside each of the last 2 months to begin the new year, but right now very clear compression over the last 5 days as we continue to develop this very narrow range of price action. Still uptrending market, but the more you look at this compression here, the more it looks like there could be a failure that may occur. A downside break again through 50.60 could open up a return back toward 49.60, which is the previous week's low. And even if we did have a one-day sell-off or a big move down here, bulls may look to return this thing right back toward recent highs or even to new highs. A failure through 49.60 and you're opening up a continuation that could take us back into the 48.50 range. 48.50 big time CLVN, also the previous year's high price right there. A return back to that point would be quite a pullback in the overall scheme of this up move in the last 4 months, but again could still be a buying opportunity until proven otherwise. So right now, still heavily compressed in this range, still very much lacking in eagerness to see expansion from this range right now. But if there is a failure through 50.60, we could see a one-day move downward. Does it happen today? Do we begin March with a move down? March 1st will be tomorrow, and we'll have a new set of pivots for the month. But right now, still very much compressed with the potential for a move that is easily 130, 150 points of range. Until then, we could see further compression of this range, further development until proven otherwise. Now, taking a look here at the NQ, an even more compressed range has developed here as well over the last 4 days, now 5 trading days. Did finish yesterday's session on a low due to earnings out of a tech stock or two, but for the most part still very much compressed and still lacking an expansive type of move just yet. The 17,800 level is the level to continue to watch here. Any failure at 17.8 and you start to open up a 400-point drop into about 17.4. Again, that would be right around the previous week's low and right around current year-to-date VWAP. Now, again, as we mentioned, even if we did see a one big drop or a 2-day drop, that could still be met with buying pressure here for another move up. But we're getting dangerously close to the previous or the current month's midpoint here for next month's pivot range, and if we do fail at that level, there tends to be a move into the previous month's low. So do we get a drop as low as 17.2 up ahead? Big time CLV in there as well, and if we did move into that zone, perhaps another bounce could be seen out of that level. But again, keeping an eye on 17,800. Now taking a look here at crude oil. Crude tried for a breakout in the previous session and failed. Big time move through the 7900 or 79 level, but really didn't really get a massive continuation through that zone. That's what we talked about in the pre-market video, is if we get through that level and just kind of mess around there, we could be hit with a rejection and fall back into the range, and that's pretty much what happened. For today's session, we're right inside the pullback zone here between 78.80 and 79. That's a spot right there where bears want to defend for an inverted checkmark day down, which could take us back down within the range. We've had this now 13-day developing range that's been in play, and if we're going to fail at the upper end here, then we're likely going to rotate back down within the range yet again. Still building energy for a major breakout ahead. This could be a huge breakout of 8 to 10 points of range once it's ready to go. Now again, which way will the breakout occur? Likely to the upside, but we haven't really been able to get through the 79s in a long while. It's been many months now. Back here was the drop through that 79 level, and that was on the November 1st key range or key level there from the FOMC, drops through the level, and then rejected each and every time it's come into the zone. We have had a rounded bottom and higher lows coming into the level lately, so again, that would suggest an upside break at some point, but when? That's the big question right there. As of right now, bears looking to keep 79s offered this morning and perhaps dropping this thing back toward about 77 today in the best case bear scenario. An upside break, again, if we did get an upside break, would need to be tremendous in size. It'd probably be a 4-point day where we rally to about 82. You know, one of these days right here. This was about $4 itself, and it was a transition day through the 79 level. You need a transition day back through 79 to the upside, and failure to see something like that would just suggest we're back in the range, if not even pulling back a bit deeper before the next move occurs. All right, taking a look here at gold futures. Now gold, again, remains stuck to 2040. This is a magnet for price right now, big time magnet for price. Previous session with a great failed new low, but failed to get the 2050 for an outside day. Instead, just kind of got stunted there and just fell shy. Now we have an inside day, all trading at 2040. If you count the days back here, 1, 2, 3, 4, 5, 6, 7 days, maybe even 8. This compression is building energy for a big time move. So if we mark 8 days right here, this is the compressed range right there. That reading is 51% of average, and you can see how narrow that range has been compared to what we've seen recently. And a big time move would be somewhere between 60 and 80 points. 60 and 80 points of range. 66 would be the 125% target. So if we do get a break, it could be a big one here, because 40 points takes us to the edge just from 2040 up. 60 points would take us up to 2100 for a big time test. Does this one fail instead? Do we break down through 2000? Again, this thing's been stuck between 2000 and 2080, and right now we're right at that 2040 magnet, building energy, clearly a ton of energy in this range. Can we see a breakout from this range soon? Until then, could be back and forth chop at the center of this range. Lastly, taking a look here at the YM. The YM has had a little bit more of an ability to go down compared to the ES and the NQ, and right now we're seeing a bit of a perfect tweezer top. You don't see that very often, a perfect tweezer top where yesterday's high is exactly today's high so far, and in a downtrend as well. This thing is sitting right on the 38.8 level. The 38.8 level is the level we've been watching here for a sign of failure. If we start to break through that level, it'll open up the other side of the range at 38.1, in which case we could bounce from there. So right now, keeping an eye on 38.8, any failure at that point, and you could start to open up some downside up ahead. So mostly range bound. This is a sloping, narrow range compared to some of these other markets. Sitting right on top of the breakout point of 38.8, failure there, and you start to rotate back toward 38.1. Could happen all in one day. This was a one-day move right here. This was a one-day move right here. It could be a couple of days. We'll see how it develops. We may even see a holding pattern here until March 1st, in which case we get some sort of movement out of these narrow ranges. All right, that is it for now. We'll see how this develops the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.